Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on what the CBN's MPC decision means for you, your business, and the financial market. The Central Bank of Nigeria's Monetary Policy Committee had its first meeting of the year last week, Tuesday and Wednesday, 25th and 26th January 2021, to discuss recent and domestic developments since their last meeting in November 2020. The MPC is the highest policy-making committee of the CBN and composed of an 11-man committee, including the CBN governor. The MPC meeting holds bi-monthly, with 5 more meetings this year. The MPC voted unanimously to keep rates at current levels, monetary policy rates at 11.5%, asymmetric corridors at plus 100 basis points and minus 700 basis points around the MPR, and cash reserve ratio at 27.5% and liquidity ratio at 30%. Expanding on the key rates, the MPR is the interest rate at which the CBN lends to the commercial banks. The MPR is the benchmark against which other lending rates in the economy are pegged. It is also used as an instrument to control inflation in the economy. Though the MPR has been ineffective in recent years, the rate has been used to signal the CBN's direction. Cash reserve ratio is the minimum amount banks are expected to retain with the CBN from customer deposits. This implies that out of every 1,000 naira deposit collected by the banks, 275 naira is expected to be with the CBN. Effectively, the banks can only transact business and earn income with only 725 naira out of the 1,000 naira. Liquidity ratio. Liquidity ratio is the ratio of a bank's liquid assets, cash and government securities, to its liability, mainly deposits. This is to ensure that banks are able to meet their short-term obligations, that is, ability to pay you your money anytime you request. The asymmetric corridors are used to determine the following: the standing deposit facility rate. This is the lower band, 700 basis points, around the MPR, and the rate at which banks place funds with the CBN at 4.5%, but daily deposits are currently capped at 2 billion naira. This means that any excess fund placed by the banks with the CBN will not attract interest. The standing deposit facility rate, 12.5%, depends on the upper band plus 100 basis points, is the rate at which banks borrow from the CBN. How will the decisions of the MPC impact you, your business, and the financial markets? 1. The CBN is expected to sustain its targeted credit facility to household, SMEs, and critical sectors like health, agri, and the manufacturing sectors. This will boost consumer spending and manufacturing output. Also, this will provide more access to single-digit loans for business owners. 2. The CBN plans to extend the 1-month moratorium on the intervention loans and keep the interest rate down at 5% from 9% for another year. This will keep the finance cost of the beneficiaries low. 3. The CBN has been encouraged by the MPC to expand its current stimulus packages, which is currently 4% of GDP, to support fiscal interventions to boost economic activities. Consequently, Nigerians should anticipate more stimulus packages from the CBN in 2021. 4. The CBN's determination to increase FX inflow in the economy, going by the recent policy pronouncement on the International Money Transfer Operators (IMTO), diaspora remittances, and non-oil export proceeds, should boost FX liquidity in the short to medium term. This should prompt a gradual convergence of the exchange rate at the investors and exporters window and the parallel market. However, this does not address the fundamental problem of FX shortages in the medium to long run. 5. The MPC's position to keep the MPR at the current level implies that short-term interest rates in the fixed income market will remain low, hence supporting better performance in the stock market due to limited investment options. You may want to allocate some funds to stocks with consistent dividend history. You can listen to the recording last week for more guidance. 6. For the fixed income market, this meeting provides more clarity and reestablishes CBN's relaxed stance on interest rates. Hence, interest rate on FGN bonds is expected to decline in the coming months as activities pick up. The past few auctions also revealed that the federal government is not desperate to borrow at high interest rates. 7. The central bank governor defended his decision to fund government expenditure. This implies that this trend may be sustained, giving the federal government a fallback option to meet its financial obligations. The next MPC meeting will hold on the 22nd and 23rd of March, where we believe the MPC will maintain its dovish stance until the economy returns to growth. The CBN can apply other policy tools to guide interest rates in the fixed income market and sustain the use of moral suasion to nudge bank lending to the real sectors. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.